Welcome to the 3-Edge Week in Review for the week of February 17th. I'm Fritz Folts, the Chief Investment Strategist here at 3-Edge, and joining me here today is a special guest, one of my colleagues here at 3-Edge, Amanda Preston. Amanda is Director of Wealth Solutions here at 3-Edge. She's a certified financial planner, and she's located in our LA office, hence the sun in the background. The title of this week's video is In Investing, Defense Can Win Championships. And I wanted Amanda to be here today because she spends a good amount of time in her role speaking directly to investors. And it certainly seems that investors in general are becoming more and more concerned about the U.S. stock market, even with indices such as the S&P continuing to reach new record highs. It seems as though investor uncertainty and anxiety has even ratcheted up here in 2025. And perhaps this isn't surprising in the current environment, which Steve Cucchiaro and I have referred to as being a time of radical uncertainty. And what Amanda and I are going to do today here is discuss how it's a challenging time for investors in terms of what to do with their portfolios. We know investors often feel that they're constantly being told by people on Wall Street that they must remain 100% fully invested at all times through both up and down markets. And when Wall Street says remain fully invested, more or less they're talking about the stock market. So the idea for today's topic, in investing, defense can win championships, was actually a result of watching the Superbowl, where it became abundantly clear that at least in football, defense really can win championships, and the Philadelphia Eagles were living proof. It's also the title of one of our more popular commentaries, which seeks to address this investor anxiety over believing you must remain 100% fully invested at all times to achieve your goals. And the commentary points out that by playing some defense, it's possible to generate returns, and at times even better returns, while taking less risk, and therefore hopefully providing some measure of peace of mind when it comes to investments. And we believe it's important to play both offense and defense when investing. So here's the thing about that. We know stocks go up more than they go down, right? However, unfortunately, there are periods of time when stocks decline, and they decline dramatically. The declines can be sudden, and they can be painful, and it can be difficult to remain fully invested when you're watching your net worth decline in real time. The pain in investment losses is described in something called loss aversion theory that teaches us that for investors, the pain of losing money is much greater than the positive emotion from the gains. So, Amanda, let me get started and have us start. And I know that you spend a great deal of time with investors. You recently brought to my attention how the uncertainty level seems to be higher here in 25. So perhaps just you could begin by describing what you're hearing from investors out there.
Well, Fritz, I can tell you that recently investors are becoming more and more concerned about the state of the U.S. equity markets as it continued to reach new highs again this past week. There seems to be a rapidly growing level of uncertainty about the state of the world here in 2025. Investors are becoming quite concerned that something could go easily wrong, and they don't want to give back the gains they've made over the past few years. They feel conflicted. They don't want to miss out on the potential upside, but they fear that there is a risk of a market downturn, and they are very overweight U.S. equities. I think investors have been able to enjoy a great few past years in the markets. If you look at 2024, the S&P 500 didn't even experience a 10% correction last year.
Yes.
And what I use with clients is the analogy of a plane flying. A plane can't keep flying forever without landing. And I think the market is very similar to that. Eventually there's going to have to be a breakdown to cool these markets, and the plane's going to have to land sometime. Knowing this, and with equities at such high levels of valuation, I think clients, all the time say that they want to participate, right? They want to be able to participate in the markets. But at the same time, they really do want to be able to play defense in their portfolios.
So, okay. In what ways then could investors actually begin to play a bit more defense here, particularly with U.S. equity markets, as you said, near record highs? How could they begin to seek to protect some of those gains that they have generated over the last couple of years? and probably makes sense in your response, in your explanation, to talk a little bit about how we do that here at 3Edge, how we seek to play both offense and defense simultaneously on behalf of our clients.
Well, before we get into what we do in terms of managing our 3Edge strategies, I want to put my financial planning hat on for a moment. And I would say the first course of action is to take a holistic view of your portfolio, right? What are your goals? What do you need to achieve financially for retirement and beyond? The first thing I do with clients is look at where their portfolio is today. Are they taking on too much risk? Are they taking on not enough risk? Are they being fairly compensated for the risk they are taking? And that's really the first step. Identify where the efficiencies and the inefficiencies are. The second step is to choose a portfolio that's suitable for each individual client. There are many clients out there who simply can't tolerate a buy and hold approach. And we recognize that, particularly during moments where there's significant market volatility. The key to client success, and what I tell clients every day, is being able to stick to their long-term financial plan and be able to sleep at night. And I would say the most obvious way for investors to manage their investment risk is to have portfolios that are properly diversified. Importantly, what we say appropriately diversified, we mean diversified beyond just stocks and bonds, right?
Right.
For example, we know that we can hold gold in our strategies, and gold can help protect against a plethora of investment risks, including rising inflation, rising debt levels, geopolitical risk, all of which are being potential risks that investors are facing today. Certainly gold has been a better hedge against equities than bonds, which have struggled over the past few years. Gold's outperformed the S&P 500 last year in 2024. And year to date, gold's up already 10% in less than 2 months. Commodities is another real asset that can add an additional layer of protection in clients' portfolios. So broad diversification can really help clients stay the course during periods of market turmoil.
Excellent. Great. So that's a really good and a pretty straightforward first step, right? Investors can take in order to begin to play a bit more defense in their portfolios in this current environment. So now I think it would be helpful to briefly describe our approach, our active tactical approach, where we really are seeking to play both offense and defense simultaneously in our core strategies, because I think it would help inform people certainly about our investment philosophy. So I'll turn it over to you.
Absolutely. So what we do once a suitable strategy is chosen is we are tactically adjusting our core portfolios based off the proprietary 3Edge research model. So if our model research is indicating increased risk, our investment committee can reduce clients' exposure to risk assets while increasing our holding in assets that may be able to be more defensive in nature, while still trying to maintain that global diversification along the way. If our model research is indicating that higher levels of equity allocations are appropriate, then the investment committee can go ahead and add some of those equity asset classes that we model out. It is important for investors to understand that we are not trading in and out of the market all the time.
Right.
And we're not trying to time the market, right? But rather, we know that in certain environments, certain asset classes tend to do better. And so when there are different economic and market environments out there that present themselves, we can either lean in or lean away from those asset classes in our investment toolkit, and it may be more appropriate for the investment environment. And again, while we do all this, we remain globally diversified. So Fritz, maybe you could pull up our seasons of the market chart, which I think would be very helpful for clients to take a look at.
I will do that. Steve and I have shown this chart before. It's basically just a way to visualize the economy and the markets and how they go through different cycles and different phases. And we would say that could be thought of as being similar to the 4 seasons in nature. And in the seasons of the market, we point out that different asset classes, as you said, different asset classes do better depending on where we may be in the economic and market cycle. And that's why, based on our model research, along with the full-time asset diversification, we will adjust the portfolios depending on where we believe we are and where we believe we may be headed in the cycle. And importantly, if you think about the four major phases of an economic and market cycle as representing the seasons of nature, you have to realize that by only holding stocks and bonds, you're only covering half of a full market cycle.
Well, Fritz, as we say in investing, defense can win championships. And as we saw during the Super Bowl, let's roll the tape and take a look.
All right. And I will now refer to the chart, which I actually call Defense Wins Championships. And what the chart shows is the performance of the S&P going back to January of 72. We start there because that's when we went off the gold standard. And what we see on the first line is the S&P 500 from 72 through 2023 generated 11.1% annual growth rate. And now we're going to address the argument on Wall Street that says investors must remain invested at all times no matter what is happening so as not to miss out on returns. And, okay, so let's see how investors did if they missed the 12 best months during that period of time. And lo and behold, they did not do as well. If you miss the best months of performance, you are not going to generate as good a return. No question about that. But now let's look at what I describe as the other side of this coin. What if an investor were able to avoid the 12 worst months of investment performance during this period? What would the results be? And as we can see here, they actually would have achieved a return of 14.7%. by being able to play defense and avoiding the 12 worst months of decline of the S&P during the period. Now, a huge disclaimer. No one, including us here at 3 Edge, is going to be able to completely avoid all market declines. But I think that the message here does indicate that there are benefits to being able to play both offense and defense, and investors don't necessarily have to be just fully all invested in all equities all the time and suffer through these periods of market declines. They can do other things and generate acceptable returns and still have more peace of mind. And that concept of risk management and capacity to play defense is foundational to our investment philosophy and practice here at 3 Edge. And so with that, I want to thank Amanda for joining us here on the 3 Edge Week in Review this week, bringing our attention to the increase in investor anxiety over the heightened level of uncertainty that we are all facing both here and at home around the globe in 2025. And as always, we'll be right here seeking to keep our clients and listeners informed through our weekly videos. So that will do it for Amanda and me for this week. Steve Cucchiaro and I will be back next week with another edition of the 3 Edge Week in Review. As a reminder, all our videos are always available on our 3 Edge YouTube channel. If you know someone who you think might enjoy and benefit from our videos, please feel free to share them. And if you enjoy watching the videos, find them to be helpful, also consider subscribing to our 3 Edge YouTube channel. We would be most appreciative. So until next time, on behalf of Amanda and everyone here at 3 Edge, thanks for listening.